Kansas just passed a new law that could be a very big deal for HealthShare members. So starting with the 2027 tax year, some Kansas residents who use a qualifying healthcare sharing ministry may be able to deduct part of what they pay towards their HealthShare from their Kansas taxable income. And I know that sounds like a very boring update, but stay with me because this is not just about Kansas. This could be a sign that more states are starting to recognize that HealthShares are a legitimate way for families to handle healthcare costs outside of traditional health insurance. And if you are self-employed, a small business owner, you're a freelancer, or you buy your own healthcare, this is something you need to pay attention to. Because if more states follow Kansas's lead, HealthShare members in other states could eventually see similar tax advantages too. So in this video, I'm going to explain what Kansas just did, who may qualify, why this matters, and what this could mean for HealthShares going forward. Now, quick disclaimer, I am not a tax professional. This video is for educational purposes only, and this is not tax advice. If you live in Kansas and you are part of a HealthShare, talk to a qualified tax professional before claiming this deduction. You will also want to watch for more guidance from the Kansas Department of Revenue as the 2027 tax year gets closer, because the details matter, and with taxes, you do not want to guess. So Kansas passed a bill called the Healthcare Sharing Ministries Tax Deduction Act. The bill was originally vetoed by Governor Laura Kelly, but the Kansas legislature overrode the veto, so the law is moving forward. So here's the basic idea. Starting with tax years beginning after December 31st, 2026, qualifying Kansas residents may be able to subtract certain healthcare sharing expenses from their Kansas taxable income. The deduction is capped at up to $5,000 per year for an individual and up to $10,000 per year for a married couple filing jointly. So the actual savings will depend on your personal tax situation. But still, for a Kansas family using a qualifying HealthShare, this should make their healthcare strategy even more affordable. And that could be a pretty big deal for a lot of families right now. So the law applies to qualified healthcare sharing expenses. Now that's pretty much going to include the HealthShare membership amount, what you're paying towards your monthly contributions, and any administrative fees. The law also says that qualified healthcare shares that are received by the HealthShare to be used for medical expenses are not going to be used for taxable income. And honestly, that makes sense because if you are part of a HealthShare and you receive funds from your HealthShare for eligible medical expenses, Kansas is saying that those shared amounts should not be treated like regular tax income under the state income tax rules. Now, that's important because HealthShare members are not receiving that money as income. They are receiving that money to help pay for eligible medical bills. So this law helps clarify that, at least for Kansas state income tax purposes. So what counts as a qualified healthcare sharing ministry? A qualifying organization has to be a nonprofit organization that is exempt from federal income tax under 501c3. It also has to limit membership to people who share a common set of either ethical or religious beliefs. It has to facilitate sharing among members who have financial or medical needs. It has to provide quarterly statements, and it has to complete an annual independent CPA audit. And it has to clearly state that it is not insurance. So this bill does not appear to name specific HealthShare organizations. It defines the type of organization that can qualify. And based on how this is written, many of the larger, well-known HealthShare organizations today are likely going to fit that definition. But again, if you live in Kansas, do not assume. You will want to confirm whether your specific HealthShare qualifies once more guidance is available. And again, you should talk to a qualified tax professional before claiming anything on your taxes. Now, here's why I think this is a pretty big deal. Now, Kansas is saying qualifying members may be able to deduct those expenses from their Kansas taxable income. And it also gives HealthShares more legitimacy, not because HealthShares are insurance, because they're not, but because Kansas is recognizing that HealthShares are a real option families are using to handle medical bills. And I think that is a good thing because Americans need more healthcare options, not less. This is especially important for self-employed people and small business owners because they are usually the ones getting hit the hardest. When you work for yourself, you do not have an employer helping pay for part of your monthly healthcare costs. You don't have an HR department picking options for you. You are pretty much on your own. And for a lot of families, the marketplace plans are still very expensive. So when a state says, hey, we're going to give qualifying HealthShare members a tax deduction, that can make a real difference. So if you're in Kansas and you are already part part of a HealthShare, this is definitely something to keep on your radar. And if you're not in Kansas, I would still pay attention, because I'm hoping this could be the beginning of a bigger conversation about how states treat HealthShare members. And if you are new to HealthShares and you're trying to figure out how they work, who they are a good fit for, and what questions you need to ask before joining one, I have a free guide that walks you through it all. So you can grab that using the link below, because while a HealthShare can save you money, you still need to know if it is a good fit for you and your family. So grab the free guide below, and I'll see you guys in the next video.